Hello there, you're watching the daily edition of Your Trades on ET Now. This is Priyanka Uppal and along with me Srishti today. Srishti, we saw a lot of pressure on coming in from the global market especially. And what we stopped was a longer streak. Yesterday only it got halted and today we've of course, we were in pressure. All sectoral indices have closed in red. Sensex is down by 300 points. NIFTY is at around about 25,200 levels. VIX has shot up a little, but then this sharp sell-off, what we saw in global markets, especially after the weak manufacturing data which came in US, and that has brought back the fear of recession again in the US, which was actually a gone-by story, but then looks like it has come back again for the global markets and for us also. All the sectors have closed in red today. Major cuts coming in from space like metal, IT especially, PSU bank, commodities. Smaller pockets wherein now we did saw that there was some strength. Small PSU banks, mid and small PSU banks especially, there were a couple of names which were in plus today, but then majorly a heavy decline in technology stocks, what we have seen globally also, as the worries about the global growth outlook has come back, looms again, and that's what has weighed on Indian markets also today.
Well, certainly, Priyanka, but one such theme that we have been tracking is the fall in the crude oil prices.
Yeah.
Indeed, a good positive and news flow coming in, and all of these stocks related to the crude oil prices, be it OMCs, tire counters, paint counters, and even cement pack was seen to be shining bright. And if you see the stock of BPCL, HPCL sitting at a 52-week high, look at the chart of Ultratech on your screens, closed at the day's highest point, and not just that, stocks like Asian Paints and Berger Paints were also seen to be buzzing. Along with that, what we have seen is that a couple of PSU counters from Coal India as well as BHEL were some of the draggers, but even a couple of pharma counters have seen good move, be it Biocon, which closed higher by 6%, even other counters like Granules and even Laurus Labs were seeing good gains. But if we talk about some of the stories that we have been tracking, then yes, defense counters were also in focus after the government gave a nod for 1.45 lakh crores of procurement, and stocks like HAL, GRSE, they were all seen to be buzzing. Apart from that, the government, we have seen a block deal on GIC-RE as well, and the stock was seen to be under pressure, as we know that the government was looking to offload stake via an OFS, and that what we have seen panning out onto the benchmark indices. But Priyanka, like you were mentioning, that's a break on the one-stop and one-way rally that we are seeing for the benchmark.
The longest streak since we saw from last 20 years, more than 20 years in fact. But then let's understand what do we have for the index in terms of technical perspective. We have Shilpa Rout with us to navigate the way forward for us. Shilpa, welcome to Your Trades. Firstly, tell us that how do you see this move, that because you know what we saw, a flat trend coming in on Nifty yesterday, but there was some sort of respite or some hopes from Bank Nifty which also came along. But then what is it? Is it a global fear, or index are in for a consolidation for a little longer time than anticipated? What are you making of the index right now?
Priyanka, if we notice that, after a straight 13 sessions of gains, we definitely saw some sort of profit booking coming today. Bank Nifty has been sluggish from a very long time, but yes, of course, yesterday we thought of some sort of positive momentum coming in. So definitely it was expected that, probably the thirst will continue, wherein Nifty will again move towards 25,500 new all-time highs again, and Bank Nifty will be the support segment there. But the sell-off today definitely, now halts this sentiment. I wouldn't say that the trend has been damaged, because as long as we are again above 24,800 on a longer perspective, we are still very positive for targets of 25,800 to 26,000 zones. But Nifty, I think, might go on for a, not if a price correction, but probably a time correction for a few days of consolidation. And Bank Nifty again has to buck up and be consistent and sustain above 51,500 for any sort of upside thrust.
Okay, that's the view coming in on the index, Shilpa. But then where do margin of safety lies? Which are your two top bets that you're eyeing on?
You have to look at pockets and, stock specific counters. As per rollovers, we have seen that, chemical fertilizers, they have been doing really well. So that segment is definitely buzzing, and it is already showing, a lot of strength, be it Chambal fertilizers, be it UPL, be it SRF, Tata Chemical, these sectors, these stocks in the sector is already, in a very positive territory. But I believe, new buying opportunities, for a few sessions from here would be in UBL. The brewery sectors are actually looking very strong, and UBL is very well placed. UBL, I believe, with a stop loss of 2000 from here, one can look for targets of 2120 to 2150, probably 2200 as well. Likewise, United Spirits also, one, it sustains above 1500, one can look for a higher targets of 1560. So, but yes, this sector is also looking very strong right now. The other one would be again, strong buy still continuing in Hero Motor. So this stock is actually in a very strong uptrend. It is showing a lot of strength. Probably this breakout will likely continue for targets till 6000. So on any declines with support at 5550, one should be a buyer in this.
All right, so UBL and Hero MotoCorp, two buy calls coming in from Shilpa. Thanks very much, Shilpa, for both your recommendations and your time today. Moving on, now Srishti joins in to give us more perspective on the technical charts where she's found a breakout pattern or a breakdown pattern. Srishti, was it hard for you to find out the breakout stocks today?
Well, certainly, Priyanka. Why so? Because a lot of these counters which have been showing good momentum at this point in time, it's a little tricky to actually pick one of those stocks which have been doing well and going ahead. Can expect the trend to move on with the same. And let's have a look at Berger Paints. This is the stock which was one of the breakout stocks that we have spotted in today's trading session. The stock was strong by more than 3% of the gains today, and not just today, we have also earlier spotted this stock on the technical front, because you will see that 600 rupees has been a key resistance for Berger Paints. Almost a couple of weeks back, we have seen the stock retesting those levels, but yet again, the stock was seen to be consolidating a bit, and one strong move yet again coming in on this particular stock managed to retest its breakout or its rather resistance of rupees 600 rupees, now seen to be trading above its all key moving averages. And as you can see, there has been a continuous uptrend for this particular stock, and that is indicated by its 20-day moving average line. So this is the first stock that we wish to highlight on the breakout side. But the tricky part was actually to find a breakdown stocks, because a lot of these stocks that have been participating in the one-way rally upwards, where do we see the divergence now coming in? And Tata Power is one such stock that we have spotted. Why so? Because you will see that the stock has been in the uptrend, but for the past so many times, the stock has been consolidating in the tight range. In today's trading session, we have seen a breakdown while the stock breaks below its 20-day moving average. This move was also supported by a short build up on the derivative side, and hence we took it as our breakdown stock. So these are the two stocks on the breakout and breakdown side.
All right, so here's the combination what Srishti is suggesting, a breakout and a breakdown stock. All right. Moving on, let's get your word from the wise. Harold Van de Linde, head of Asia Equity Strategy for HSBC, he shared his outlook on short-term, medium-term as well as for a long-term on equities. He advised to be overweight on equities for short and long-term, as he sees some worries coming in about the growth, what has cropped in for at least the medium term. Let's listen to exactly what did he say.
I think for the short term and the long term, I think you want to continue to be overweight on the equity side. The short term, really, because we have this lower interest rate story coming through, that will help out. And in the longer run, I just believe in the sort of innovation that companies can generate globally that allows these markets to perform over the longer run. In the medium term, that would be a little bit different, because interest rates are moving lower. That's good for equities in the near term, but there will be worries about growth coming through in the medium term. So in the medium term, I would probably say maybe go for something that is more income-centric, bonds or something like that, that might provide you some support in case we see that growth worries are going to dampen the outlook for equities. But short term and longer term, I think equities look good.
Well, moving on, and let's shift focus to some of the other stocks wherein crude prices have plunged further, and with a 5% drop overnight yesterday on the likelihood of OPEC Plus restoring the production. But how does this impact the various sectors in the Indian markets? Samit is here to explain all of that. Samit.
if you look at Brent crude prices, they have fallen below the $75 per barrel mark. Now, this is the biggest intraday fall that we have seen since 1st May 2024. Yesterday, Brent crude dropped nearly 5.2% on an intraday basis, and crude prices are the lowest that we are seeing since December 2023. Now, what is more important is that Brent crude has been on a downward trend, and it has been declining for the third consecutive month. In the month of July, it was down around 6.5%. August, it fell around 2.4%, and in the first few days of September, it has already declined nearly 6.7%. So why are we seeing this kind of a decline when it comes to crude oil prices? Firstly, OPEC Plus is expected to increase its production in the coming weeks. They are due to add nearly 1.8 lakh barrels per day of crude production going forward, and this is their own plan that they had guided earlier, and this is to restore the production losses that they had seen earlier. Apart from that, on the demand side, if you look at China's economy continues to remain soft. Manufacturing data for the month of August was at a 6-month low, and China is the world's largest crude oil importer. So the demand supply dynamics is changing, and is now we are seeing more supply coming in, and the demand continues to remain weak. Now, India definitely benefits because of this, because more than 80% of our crude requirement is imported, and companies that tend to benefit more from this, firstly, is the oil marketing companies, because the fall in crude oil prices definitely boost up their marketing margin. Currently, if you look at the gross marketing margin that oil marketing companies are earning on petrol and diesel, it stands at around 11.6 rupees and 9.1 rupees per litre, which means that they earn this much amount of money by selling every litre of petrol, and these both margins are at a multi-quarter high. And as per analyst, every 0.5 litre change in the fuel margin increases the EBITDA of Indian Oil Corporation, BPCL and HPCL anywhere between 7 to 11 odd %. Apart from this, it's the paint companies, aviation companies, lubricant manufacturers, tire and a host of chemical companies that tend to benefit. Also, cement manufacturers benefit because nearly 40 to 50% of that cost are either directly or indirectly related to crude oil prices. Obviously, they'll benefit it with a lag because the fall in crude oil prices will reflect in the raw material prices with a lag impact. Also, lower crude prices is negative for oil explorers like ONGC, Oil India, HOEC, because lower crude means lower realizations for them. And as per analyst, every $5 per barrel drop in the Brent crude prices reduces the EPS for ONGC and Oil India by around 7 to 12 odd %. So keep an eye out for all these companies in trade today.
All right, we'll stay for a short break here. More to come on the other side of the show. Don't go anywhere. Welcome back. You're watching Your Trades, and now more from the derivative side. Of course, the trend appeared to be short built up on Nifty. Bank Nifty has reversed its trend, wherein there was a flat trend up till yesterday. In fact, hopes on revival, in fact, could be a heavy lifting from banks, which could take the index to high levels. But then now the trend on Bank Nifty also appears to be short built up. VIX has dipped a little today. It's near 14.4 levels, and the calls which were active in terms of call writing, where the maximum of the resistance is seen on the immediate strikes such as 25,300, 25,200, and the support appears to be at 25,100, where maximum of the put writing has seen. So we could be in for some consolidation. That's what Shilpa was also indicating, Srishti.
Well, certainly, Priyanka, let's keep our eyes on the derivative build-up that we are seeing for the benchmark indices. But a lot of stock-specific action is what we have witnessed. And one such stock was GIC-RE, which was in focus on the back of the government's plan to sell up to 6.78% of its stakes in GIC through an offer for sale. Let's revisit Nikun's take on the same.
The government has been very reasonable in the way how they have followed their divestment strategy. Even though there is a strong bull market in in PSUs, government has really refrained from regularly or periodically selling some of their or reducing their ownership in some of the PSU stocks, and whatever they've done really they've strategically timed it so well that does not have an impact on the stock price per se. But we heard from the management of IRDA, I think on Monday, and now GIC. So are we in that phase where the government really feels that they want to use the market conditions to their advantage to raise some money? This year the disinvestment target is not there, so obviously there is no compulsion per se. Or will GIC, and if IRDA goes through, these are going to be one-offs where government in a sense would say that, okay, we feel the market can absorb it. Strategically, we want to reduce our stake in it. We are looking at raising some cash, and that's about it. So if this is like a one issue effect, maybe something happens in one more company, then you could say that this is something which markets would ignore. But if that entire process, GIC and then IRDA and maybe some more railway names and maybe some banks, then you do have a supply overhang coming in the market. As of now, markets are not worried about government supply overhang coming to the market periodically, not on a calendar basis, but in a very scattered manner. Government has sold their ownership or reduced the ownership in some of the PSUs where ownerships are high. If that is the whole intention behind GIC, then markets would move on.
Okay, well, interesting. That's the take coming in from Nikunj Dalmia, the editor-in-chief for ET Now. But then now, let's get to the story behind the metals fall today. Let's take a stock of the decline in those industrial metals on the back of macro concerns, which is stemming in from both economies, the US economy as well as Chinese economy. Let's go across Ashesha, who has more details on this entire subject. Ashesha, over to you.
It's just not crude oil that has seen a decline overnight, but industrial metals globally have also taken a knock overnight. In fact, US PMI data, which came in at 8-month low, is impacting commodities globally. Let's talk about some of them. Aluminium prices on London Metal Exchange have declined nearly 5.5% over the last 5 days. We have copper, which is down 5%. Nickel and zinc prices have also declined nearly 3.5 to 4% over the last 5 days. Chinese economy woes also continue for the entire commodity basket. Remember, manufacturing data, services data and real estate property market continue to impact global markets, global commodity markets, and Bank of America in fact has gone ahead and reduced GDP target for China from 5% earlier. They've lowered it down to 4.8%. So concerns around China, which is the world's largest producer and consumer of most industrial metals, continue, and hence global commodity market continue to take a knock. In fact, let's also shift focus to two ferrous metals, iron ore and steel. Iron ore prices have also been on a declining trend. They were about that $100 per ton mark, but they fell to below $95 per ton on account of concerns from China, and that is also impacting markets globally. Analysts, however, as far as iron ore prices are concerned, analysts say that they have likely bottomed out, but there are limited upside triggers from here on, and hence perhaps iron ore prices are also likely to remain range bound for the time being. As far as steel prices are concerned, remember, steel prices have declined nearly 25% on a year-to-date basis, and Indian steel mills are also suffering because imports from China and Korea continue to be on the higher side, and exports have also been impacted because of global slowdown. So Indian steel mills continue to face the pressure. So clearly not all is well for the Indian commodity market and global commodity market. Indian metal index on the back of that is declining 1% today and has fallen nearly 2.5% in the last couple of days.
So much, Ashesha, for highlighting all those details. We're moving on, and my colleague Prakash Priyadarshi caught up with the Steel Minister H.D. Kumaraswamy after the ISA Steel Conclave. Let's listen into what the minister said about the import duty and FAME 3 scheme.
Industry, they are requesting, now it is 7.5% tax is there. That actually they requesting Finance Ministry to raise it to 10 to 12%.
There is a meeting on FAME 2, FAME 3 in
FAME 3.
Yeah, in PMO. So anything details?
No, PMO, they had meeting actually about FAME 3, but they also suggested from PMO some other implementation, because from FAME 1, FAME 2, some problem what they are actually looking, that they have to sort it out, that lacuna. For that they are working out.
And now we have Gaurav joining in with the list of all those stocks which are buzzing in trade today on the back of some news. Gaurav, over to you.
Well, yes, EU Small Finance Bank has now applied for universal banking transition from the Small Finance Bank to RBI, and now let's look at the scenario analysis as how this can play for EU Small Finance Bank. So there are three factors which will definitely play out for the bank. First one is the priority sector lending. So when we talk about small finance banks, they are required to give around 75% of the total credits to priority sector, but as a universal bank this ratio will come down almost to 40%. Now this gives new avenues for the credit for EU Small Finance Bank, and at the same time this will also generate some kind of extra return when we talk about the other credit facilities. Next, let's talk about cost of funds, because as a small finance bank, we also know that when investors and as well as the depositors demand for high deposit costs, and that is the reason why the cost of fund for small finance bank is a little higher. But when we talk about universal banking, this cost of fund is also likely to go down. Now, scenario analysis suggests that, and Investec also suggests that this could go as low as 20 basis point. I mean, the cost of funds could go down by 20 basis point, and there also we may see some ROE upliftment for AU Small Finance Bank. And lastly, when we talk about capital requirements, usually small finance bank are required to keep around 15% of the capital adequacy ratio. But when it is transformed into universal banking, it may come down almost to 11.5%. So there again, we may see some headroom for growth for AU Small Finance Bank. Overall, we may see ROE upliftment somewhere in the tune of 400 basis point if RBI allows AU Small Finance Bank to convert into universal banking. Let's not forget that we have already seen that AU Small Finance Bank advances have grown almost by 33% over FY28 to FY24, FY18 to FY24. And when we talk about the Q1 FY25, there also we saw some strong growth. Advances are already reaching around 1 lakh crore rupees. We already have that AU Small Finance Bank is reaching around 2,400 touch points. So we may see some increase there as well. And another point to keep here is that this will also set a benchmark for another universal small finance bank for the conversion to universal bank. So we already know.
Thank you so much, Gaurav, for highlighting all those details. But with this, viewers, it's time's up in this edition of Your Trades. It's a goodbye from me and Priyanka and the entire team who put this show together. Thanks so much for watching.